Hey everyone, hopefully you're having a good day. My name's Andy. My channel's Finding Value. Today we're going to do our daily technical analysis update of commodities. I'll give you my financial opinion. There is something I want to start with just to give you guys a reminder is, I know we're looking at technical chart patterns here, and what I'm doing or what I'm trying to do is look through the chart. The chart is nothing more than a verification of the market conditions. It's not the driver. The technical patterns is the transactions being performed by humans with herd behavior. Herd behavior creates these patterns. It's the drivers behind everything that is creating the humans. It's forcing humans to behave a certain way, and we're just verifying it through the herd behavior here. It's looking deeper than the patterns. The patterns are a resultant of the market conditions and the way that humans are interacting with each other. I'm not buying some of these things based off of necessarily just a pattern. It's deeper than just a pattern. I'm looking at how the humans and the herd are interacting with each other and forming during certain market conditions and then seeing that big move higher, and which is based off the business cycle, if you want to know kind of what that all is about. So I'm going to dive in here, give you my financial opinion. I'm going to kind of explain why things are going the way they are, at least to my degree or knowledge of what I know. So here we go. We've got the dollar here, the DXY. It's a relative strength indicator. This still looks good to go higher based off of this large candlestick pattern here and the small movements going across. We're also seeing relative strength in the dollar as our inflation may not be as poor as the currencies that this is being measured against. So that's what we've got here for the dollar. Oh, got another for the dollar there, and it still looks strong, and we're starting to basically sit on top of this pattern here. Right at the top. So that's what we've got there. We've got the 10-year yield. The 10-year yield is continuing to move higher. Usually what this means is that it's pressure from inflation. Inflation is causing pressure on bonds to sell off. And we're seeing that sell off in bonds, and we've hit this resistance level that we're breaking away from. So we're seeing higher and higher interest rates. That is going to cause the herd behavior of humans to behave differently with an increasing interest rate environment and money rotating out of bonds. It needs to seek other investments. It doesn't like where it's at in a real negative rate. It means inflation is higher than the rate that the bonds are paying. That's called a real negative rate, and they're losing purchasing power gains. That is causing pain in the markets because not only are they losing purchasing power with interest rates going up, they're now losing principal. TLT, this is on a little bit longer time frame, the 20-year bonds, it's in a downtrend fashion. Looks absolutely horrible from a long-term perspective. As interest rates go up, bond prices go down, and we're looking at bond prices in this one. TYX, the 30-year, is continuing higher. In a little bit of selling pressure today. We could be peaking out a little bit, and maybe we get a little bit of a relief pullback. But overall, momentum's up. And we've broken the long-term downtrend for a move where it could be much, much higher. Remember, we could pull back and get a pullback out of this. That is a possibility where we pull on back some. Nothing goes up in a straight line. Nothing goes down in a straight line. The TYX to TNX is right on support. That's that support level right through here. And that's typically a good level to be looking at precious metals. It's very low in this TYX TNX ratio, but we haven't seen a move higher yet. We may still have a little bit more bouncing around to do at this level before we see a change in a downtrend of this ratio to an uptrend. The thing I will say is, you tie this together, we've broken out. We've done a retest move right to support. Maybe it comes back a little bit farther. And we then see that move. So a little bit weaker dollar, a little bit stronger yield. Commodities like that stronger yield, and it likes the little bit weaker dollar. Basically a sideways day to day. Will we get moving higher, or will we pull back here? What I'll say is I don't necessarily invest for the short term. What I do is I look out into the future. I see what's out there 5 years, and I say we're going to be higher in 5 years, but I don't necessarily know the exact path. The path is unknown. So I created strategies that will work for buying a low ratio, looking for a move higher, but I don't know this zigzag path as we go. So that's kind of what I'm looking at. So that's kind of my outlook and my strategies there. And I develop strategies that work with knowing where the value is in the market, and that not necessarily knowing the necessary path in the short term. No one knows the path in the short term. But gold is basically sideways. We do have some strong selling pressure these past trading days, and I don't see the buyers stepping in here yet to push this thing on higher. So we've been drifting lower and lower and lower. We're starting to play with some of these support levels where if we don't break up back above it within this next month or so, we could be closing below good, strong support levels, which means we could potentially go with a little bit further downside. The market conditions aren't ripe yet for gold to have that takeoff. Silver's bouncing off the support level that it's at. It's a flat day today, but again, we've got nice, good, strong buying pressure through here, not much selling pressure. I still think we're going to go higher in this movement. Platinum is moving higher. This is usually the one that leads in an inflationary type movement. It kind of moves on its own beat, and we're going on higher today. XAU to gold ratio moving higher. The companies usually move before gold does. We're seeing some buying pressure in the precious metals companies. I think it's good down here. It's very cheap, but we are still in a downtrend, and we have not broken out yet. We've got low, higher low, and possibly a higher low if we can stay there. That is a positive development to break out through that downtrend line. That's exactly the things that I look for in a potential breakout before it breaks out. SILJ is riding on its support line. Again, I like this type of area down here because it's cheap and we're above support. I would be looking at these types of investments at this time myself. GDX is another one that I'd be looking at down here. Why? Because we are low, and I think that people are buying this in a, hopefully, in a precursor to a move in the precious metals themselves. We're seeing positive developments in platinum. Silver looks strong. Gold's being a little bit of a laggard, but at least the mining companies are getting some buying pressure. So that's a positive development there. Crude oil, it is moving sideways. It is highly volatile. We saw a big down print this morning. It reversed that throughout the day. So when you look at this from a 5-day perspective, there's your pre-market dump. There's your nice, good, strong kind of finish to the day. And what I like to see are strong finishes. If I were to put a downtrend line on this, we are breaking out of the downtrend of this past couple of short-term movements. So I do like where it's at, and hopefully we can get some buying pressure in here to push it on higher. Natural gas also getting breaking out of the short-term downtrend. Looking at this from a daily perspective, we've got that nice, good bullish hammer candlestick. The bullish hammer candlestick is a short-term downtrend line break. That's what this looks like on a zoomed-in candlestick. It's a downtrend line that's broken to the upside. It is a reversal of a downtrend. And what we need to do is basically break out of this guy here for a new uptrend in a short time frame environment. So we have to break out of this to get moving higher. And we've done the first step of a breakout. Again, I have a technical training course coming up. If you guys, I'll teach you all of this stuff in this course. It's Thursday, September 22nd. You have to be a platinum member in the finding-value.com website for me to go through this. But this could be a reversal here for a move higher. Again, short-term analysis is not as accurate as the medium to longer term pictures. XOP, looking at that, we've got a nice reversal candlestick where it reversed off its bottom and headed higher in terms of momentum. We are down on the day, though, because we gapped lower. So momentum's higher. It looks okay. Again, I don't know which force is going to win here. We've got OPEC cutting. We've got America releasing strategic petroleum reserves. We've got a market that's, I would say, confused. I'm confused. These guys are confused. We don't know which way it's going to go in the short term. What I'm going to say is expect volatility out of oil and gas stocks and in the commodities themselves. And that's what we're seeing with a lot of the companies that are trading. Energy service companies, I still like where we're at down here. I would be a buyer myself in a lot of these energy service type companies. We've come on up. We're moving sideways. We are on the support lines, and we're getting a little bit of buying pressure, which is kind of a bullish piercing pattern here. A bullish piercing pattern is when you open low, it closes about the 50th percentile of this candlestick before it, and it's a reversal candlestick to move on higher. It's basically breaking a short-term downtrend. So that's looking better. Uranium, the futures contract pricing, we're getting still that pullback, that full pullback, and doing that retest of the breakout. Not a bad thing. I'm still positive on the sector. The Sprott Physical Uranium Trust is getting support right where it's supposed to be getting support, through that support line or that level that we've got all underneath us. This is where we need to make our jump. We need to jump from here. It looks bullish. Could we jump here? Yes. If the buyers want to push it higher, it looks good to go higher here. URNM is also throwing in a bullish candlestick right on support. The support line going across is this line where we hit a couple of times here. We hit it here. We use it as support there. We hit it a couple of times all around this line. We're using that again as a support line. We have a bullish engulfing candlestick where we could potentially head higher. Uranium's looking good on the short term. CCJ, our leader, is also throwing in a bullish engulfing pattern where it could be a reversal candlestick to move higher in the short term. Now notice, in the short term, we get thrown around back and forth, up and down, all around. I say higher, lower based off these short-term candlesticks. Long term, though, I still think we are going higher. And we're right up against resistance and we want to close above $32 a share in CCJ and close above it. We still have a nice good drive out of this. It's a small down candlestick. Everything looks good and intact for a move higher. This isn't a distribution up here, in my opinion. We're under the cost curve of uranium for these producers, and we have deficits. Inventory is getting eaten up. This will, in my opinion, go higher. Because of that, we're just validating those opinions that I have right there and those market balances in the charts and the technicals. And it still looks good to go higher, in my opinion. We've got big 2 up months, small down month. That is usually a recipe for a move higher, not lower. TAN also looking good. The energy complex in general is looking very strong. Again, I am in the opinion that we are going to go much higher from here in this because of the pattern and the way that this thing is lining up. We've got this guy. We've got that guy. There's the lower line that I just kind of drew in, and I think we're going to move on higher. COPX. Now, if we're in some huge bearish deflationary type scenario, I think this would go much, much lower. Now, what are we seeing in the charts to validate that we either have inflation or deflation? We have broken out. We normally get a pullback into the support line, which is this line right where I'm at. That's your support line. I know it looks messy there. We've come back to that support line. Is that support line holding? Yes. Broken down trend. We're trending over here, bullish engulfing today. Looks like to me that we want to go higher in the short term. The buyers are setting this up to go higher. Now, if copper goes higher, why would it be going higher in a deflationary crash scenario? It wouldn't go higher. We are probably not in a deflationary crash scenario yet. This is important to see what this does, because if we continue to go higher, that is validating that deflationary type crash is not there yet. We're using this as a thing, but COPX looks really good in some of the diversified mining companies. You guys have probably heard my opinions on the Platinum membership when we do the question and answer sessions on all this stuff. The CRB to S&P 500, again, we're moving back and forth. Overall, we are moving higher. We've broken out of this pattern. We're going to move higher. And we're seeing some strength in the stock market, which is good. We don't want everything to crash. We want the stock market to go up and our commodities to go up faster if we're in commodities. Looking at the rare earth metals, we're getting a nice, good bullish engulfing. Everything's intact. I think we're going higher with that bullish engulfing pattern. Lithium's also getting a good bounce off its support line. I think that will go higher as well. Things are looking a little bit better. It's also being tied in with the overall markets. The overall markets are throwing in a bullish engulfing. Maybe we can get some movement higher here in the short term for the S&P 500. Again, I'm a long-term bear, short-term bull at this point, very short-term bull, that I think we could get a pop higher. Long-term, I think we're going to go lower. It's going to drift lower. Short-term, U.S. Composite Index, I think we're going higher. Long-term, I'm a bear over the next 5-10 years. So short-term, I think it's a bull market going higher. A little bit weaker dollar, a little bit stronger emerging markets. I think we're going higher, bullish engulfing. We'll see if we can get that movement higher. Again, highly dependent on the dollar and the strength of the dollar and all of that relative strength against other currencies. EEM likes weaker dollar and weaker relative dollar. We've got XHB getting a nice, good buying spot here. Nice bullish engulfing. That also looks like it wants to go higher, bouncing off this support level. We'll see where it goes here. Lumber also getting a little bit of support. We're back inside the pattern there. We have cocoa futures basically moving sideways. I still think that looks good to go higher. Not much downside risk. Wheat still looks pretty good. We're still above that breakout. We could do a retest and then move on up. You've heard me say that multiple times now. Soybeans still looking good to go higher. I like this nice small little pullback. That's very reminiscent of a move higher, before a move higher. Big up days, small down days. It's a continuation stair-stepping pattern higher. Corn also looking good, stair-stepping higher. I like that. And then copper, we were up, slightly down. People are positioning in our copper diversified mining stocks. I'm expecting this, hopefully, to move higher out of this channel. If we move lower and it dive bombs lower, deflation. If we move higher, inflation. Right now, it is confused on which direction to go. We're moving sideways in the channel. But we've broken this downtrend. Hopefully, we can get that momentum to turn and move higher. Looking at Moo's getting that bullish engulfing. That looks like it's ready to go higher. We're right on support. I do like buying right here, right now. That is what I would be doing. Looking at aluminum. Aluminum still getting a little bit more selling pressure down here today in the futures pricing. But people are positioning in the companies themselves. I think aluminum actually looks decent. I do. Looking at Baltic Dry Index, a little bit down today. Looking at the weeklies, we were down a little bit. You can't really see it there. It was a flat day. But I am, if we see bullishness in the overall commodities like copper, aluminum, coal, and all these other ones, I think Baltic Dry Index is going to go higher and bounce higher again. So overall today, I think uranium looks good. We're seeing bullish engulfings across the board, guys. It's overall lining up kind of bullish here. So overall market, bullish. Copper's looking bullish. We've got people positioning in some of these precious metals. Some of the precious metals look bullish, like platinum. And silver doesn't look too bad. You know, oil it's firming up a little bit. It is highly volatile. And in all honesty, guys, I haven't seen this much conflicting data on oil and natural gas as I've ever seen in, I think, the markets before. We're seeing people cutting back on oil. We're seeing more people release it from the strategic petroleum reserves. I'm kind of confused on who's going to win out. I think they're battling each other right now. But medium term, this winter or next summer even, we're going higher. That's my opinion, unless there is some dramatic decline in demand. But right now, it's supply-driven. We've got supply-side problems. And right now, I think that's going to be the determining factor of which way the price goes. So that's what I've got for today, guys. If you guys like the content, give me a thumbs up. Subscribe to the channel. Subscribe to the Platinum membership on the website. It's in the description link below if you want to click it. And we'll catch you next time. This is Finding Value.